chaos in the markets as we enter bear territory. Oil crashes, credit markets take a hit. There is a lot going on. What's your process? We have one. It's helped us mitigate risk during this turmoil. Stay tuned. We're going to go over that, big charts, and our game plan going forward. Let's go. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click Show More for additional information and links for today's video. Have lots of links today, lots of good articles for you. Also, if you're looking for a different opinion of Wall Street and big TV, believe me, you don't want to be listening to these knuckleheads this week. Please do consider subscribing. First up, let's talk about our agenda. We're going to keep it tight today. Go to the charts. We're going to do a book review because we're probably going to be reading some books, and we're going to go through what keeps me up at night and our game plan going forward. Let's go to the big charts. Okay, first up, understand this. What we're seeing is unprecedented. The swiftness of this decline we've never seen. I said that when we hit a 10% decline. Same thing goes here, right? We're down 24% year to date, over 30% from our all-time high in February. So a couple weeks ago, I showed this chart and I said, okay, the long-term trend is still intact. So we were in a correction within a bullish trend. We now have broken that and it's officially a bear market. So how do you see that on a closer level? Long-term view, here's your monthly view, 2009, okay? That's your low, and then you draw your support line, and clearly we broke that support. That is real concerning. Then down here, you have momentum, right? And when momentum crosses over, that's no bueno, that's not good. Why? Because it happened here, it happened here, happened here, and it just happened. So, and then the other thing is, when you look down here, let me go ahead and erase all that. You know, obviously it concerns me where we are in the level. So then we look at the weekly view. Same thing, right? Negative. Look at that. We're down. So here's your support. Right now, when you look, okay, that 2450 area is going to be your support right now for this downturn. An average bear market's 26%. Average, okay? We've had over 50, 36, etc. So a lot to be determined this week, but look again at that turnover right there. So here's your daily view. Obviously, it's ugly, okay? Beyond ugly. And when I look at this, there's a couple things, right? One is we've had massive volume on this downturn, okay? So that reaffirms what's going on, okay? The other thing is when I go down here, this is your volatility index. We hit 75 yesterday. 81 is an all-time high. That is massive, okay? So obviously that's a big concern. I'm going to talk about that in a second. Everything else is turned down. So, you know, yesterday I did a call with my clients. The first question was, is this a buying opportunity? And I'm going to say, not right now. Absolutely not. Why? Because of this volatility index, right? I said it a couple weeks ago. Our range, okay, when you're in a 10 to 15 range, that's a buy signal. When you get above 15, you get a yellow, a pause button. When you get above 31, it's a no buy zone. We are way into that no buy zone. 31, 41, 51, 61, 71. Okay, so obviously, these markets, there's a lot of volatility. It's still not time to buy. Talk about more detail in a minute when I get the game plan. So let's go to our bonds. Now, something's happening here, not sure, okay? So we really want to be able to take our time. Obviously, bond prices have gone up. Little surprising here, okay? Because of the Fed dumping some money in and some other items. So right now, going into the weekend, Friday, I'm probably looking to trim some of our positions here and just see Is this a head fake before we go down? Because it's getting out of our range. And that's my concern. So we're really going to continue to watch this. You would think with everything going on, we're going to go to zero interest rates, but that is to be determined. Next up, we're going to talk about sector spotlight. Okay, sector spotlight. Not a lot, obviously, because everything's down. Now, we do have and have had a pretty large position in gold. Now, a couple weeks ago when we had that pullback, okay, that gave us an opportunity to buy on that pullback. And then we went up again, and then when we hit our high end of the range, we trim. Now, we're seeing the same thing here, right? We're having another pullback, but caution for a second, okay? I talked about the bond market. The bond market and the gold market are very correlated. When rates go down, gold goes up. Now, gold goes up also in fear, but it's been very correlated to bonds right now. So when I look at bonds and gold today, I'm really going to watch it, and it might be one of those days, depending on where the market goes, I might trim some of it going into the weekend, not sure. All right, so next up, I've had a lot of questions about oil. It has been decimated, crushed this week, okay? Is this a time to buy oil companies, etc.? No, absolutely not. Trust me, let me show you why. First off, let's take a look at our numbers here, okay? We're looking at all-time lows. A lot of people are picking below $30 per barrel, 28 range. So that's one reason. Just like I look at volatility in the S&P, I look at volatility in the oil market, okay? Above 35, you don't want to touch too much volatility. How about 124 yesterday? Holy schmoly. We're talking about unprecedented, not even close all-time high. Ridiculous. I wouldn't touch this market with a 10-foot pole right now. Be patient, be smart, okay? So now, I'm going to switch over to a book review. I'm sure we could all use a quick reprieve. Obviously, we all need a break right now, and reading is a great escape, okay? For me, when I'm looking for books, I'm looking for tactical books. I like reading about leadership and things like that. I mean, back here, I got The Art of War, the classic book. Mastering the Market Cycles, hello, kind of working on that one. And then my last review on the 100-year marathon about China. Let me tell you how much that's helped me. So this month, I've got a book called Boyd, okay? John Boyd, the pilot fighter who changed the art of war. This is such an amazing book. I'm getting chills right now. You've never heard of John Boyd. I've never heard of him, right? Air Force, worked his way up, but didn't deal with the politics, okay? But he was responsible for so much change in military, okay? For one, he fought for lighter planes, okay? Because of politics and lobbyists, they kept on making his designs heavier and heavier. And he was only a captain. He never got above that because they hated him because he was so straight ahead. He created something called the EM theory, and then he called what's called the OODA Loop, okay? And this is where it applies to what I do every day. A short-term window is a time to observe, orient, decide, and action. Observe, orient, decide, action. I am living that every day. We'll have a link below. Absolutely worth a couple, well, I can't say a couple minutes. It did take some time to read, but just a fantastic book. All right, so now we're going to go back to the meat and potatoes, right? We're going to talk about what keeps me up at night, just a few items, okay, and my game plan going forward. All right, what keeps me up at night? Here you go, right? No one could have predicted this, right? Our friends at Hedgeye. Yield, danger, right? We've been talking about this for months. We've been positioned accordingly. It's just crazy. Now, part of it was we've talked about our cycles. Despite all of this chaos right now, don't forget that we're in cycle 4. Growth cellaring. Inflation decelerates. We've been talking about that. Peaked in January, got our number this week, and that's exactly what happened. So that's another problem the Fed has to deal with. Fed is dovish. I mean, they can't throw enough on this. Markets in deflation. So we utilize this, and this also tells us earnings are bad. Well, wait, going forward, they're going to be even worse. So bull markets end like it began, in chaos, right? So what got us here? What are the catalysts that got us here? Number one, here he is, our chairman. Let's hear it for him. Okay? Fed to pump more than $1 trillion into this market. Stupid, right? 50 basis point cut last week, nothing. Ding, ding, ding. Waste of money. Yesterday, they announced $1 trillion. The market goes down even more. It's stupid. They just don't get it. Okay? And look at the impact. I updated this morning. That's yesterday's last 2 days. $200 billion in the last 2 days. The long-term view, it is not pretty. Look at this, right? Remember when we were selling off these assets and everything was good? We're going to add, and we're going to be going to all-time highs, which was $4.5 trillion. Based on the fact that we're $4.2 trillion, we're going to end up over $5 trillion. Stupid, irresponsible. The Fed has just lost their mind. They are ineffective, and it's a shame. So next up, okay, what else has affected us? So the Fed has dumped all this money in the market. Free money, low interest rates, right? So what did they do with that? They went out, and we've had record buybacks. Look at it. Those buybacks have pushed the market higher. So they took the cash, bought back, but then they still need money, so they created debt. We went from $2 trillion to $7 trillion in debt since our crisis. That's what we've done. Well, what's happening this week? The credit markets are freezing up, okay? One is you can't get bids. I have a client that had a bunch of individual bonds. I couldn't even sell them yesterday. That's how bad this market is, especially when you look at the high yield market, which is the next thing. Talked about this again a couple weeks ago. Our spreads were real close between the 10-year and the high yield. High yield means it's a higher yield because it's lower credit quality. Well, 15% of the high yield market is oil, okay? So this whole mess, think about it. Everyone, I've been talking about this, and unfortunately, it's coming to fruition, okay? And then here you go. What is it? What got us here? So when you go back and look at the bubble of 2000, the catalyst, right? Markets go up, you get above PEs, okay? And then you had 9/11. That was the catalyst. Came back down, went back up. Then we had the real estate issue. That was the catalyst. This time, the market, you see here in 2000, how far you are above a 20 PE. We have never been this stretched in history. I've talked about this, okay? So here we are. I've kept it on there. So to get back to 20%, 18, we're already there. To get back to fair value, 15 price earnings, that's 30%, 39%. I'm going to stop there. Not saying it's going to happen, but we're real close to it, right? Because we're already 32%. But this is it. .com, real estate, and the Fed bubble, folks. That's it. There's always a catalyst. We've been talking about it, and that's why we're prepared. And I talked about earnings. I'm going to be quick on this because this is very reminiscent of 2000, where earnings peaked, okay? Earnings peaked, and then they started declining. For us, we've been talking about this since Q3 18. We peaked, and guess what? We go negative. Already, we're looking at negative forecast for the next 2 quarters. So this thing is far from over, is what I'm saying, okay? Now, let's talk about our game plan. When will this end? Nobody knows, okay? Yesterday, my son, or today, my wife is going up to take him out of Villanova. They told him to clear his dorm room. At best, you're going to come back April 14th. At that point, it doesn't make sense. They're going to be doing learning online. So the reason is because we're 2 to 3 weeks behind Italy. So that puts us in the first week, can't make any decisions. So I don't think we're going to know anything until mid-April. All right? What's your number? What can you handle? Not percentages. How much money can you stomach losing? You need to know that number, okay? Talk to your advisor and talk to us, right? So through last night, we're minus 24%. A 60-40 portfolio would put you about 14.4%. Now, for us, we were fortunate. We mitigated risk, okay? We've been able to reduce these numbers by 70, 80%. Yesterday, the worst day in history, our 60/40 models, I was able to mitigate over 95% of that risk. That is risk management, folks. That's what you need today, okay? So next up, watch the volatility index. That's when we can look at buying again. You have to be able to understand that. Find opportunities, downside and upside. Look, for now, I have the largest cash position in history. I'm hedged, okay? I've got my bond position, right? And my longs right now, 12% of it is gold, which I might trim today. So you got to be tactical, all right? That's what we've been doing to help us mitigate that risk. Follow us for updates, okay? I'm doing my best. I'm putting as much material out as possible. If you're not getting the advice you think you need, give us a call. Stay calm, stay focused, and we'll talk to you soon. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.